Good evening, everyone. Could we please stand for the Pledge of Allegiance? I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. All right. Christie?
Here.
Deacon?
Here.
Omlo?
Here.
Strubing?
Here.
Thomas?
Here.
And Watson?
Present.
And I'm here. Perfect, we're all here. We're gonna get right down to business. We have the Finance Department financial presentation provided by Financial Director and Town Auditor.
Good evening. I'd like to introduce our auditor, Justin Berg, from the auditing firm of Royer Advisors and Accountants, and he's gonna go over this year's audit.
Great.
Good evening, I'm Justin from Royer Advisors and Accountants. We're your town's financial statement auditor. Essentially, we are responsible for auditing the town's financial statements for the year ending June 30th, 2025. And it's our job to make sure that the financials in total are presented fairly, materially stated. Right to the bottom line, the town did receive a clean, the best opinion that they can receive, an unmodified opinion. Basically stating that all the financials, notes, disclosures, when combined, are fairly materially stated. Did not find anything overly concerning. And let's see here. I'll just go over, you should have received the full audit report. I think there was an electronic version printed out ahead of tonight's meeting. There's also a standalone letter addressed to you, the counselors, those charged with governance. That's our direct communication to you as the auditor, to the council. It goes over a lot of management's responsibility, us as the auditor, what our responsibility is throughout the engagement. Any major concerns, which as you read through that, if you haven't already, you'll note there were really no major concerns, no disagreements with management. Basically the process went, as expected and hoped, pretty smooth and straightforward. And so if you haven't read that, I would encourage you to read that. Just want to highlight basically what our audit entails and what it isn't, just in case people are or aren't familiar. It's a financial statement audit. It's a risk-based audit. It isn't designed to detect fraud. Misstatements are generally due to errors or fraud, so naturally we are looking for errors or fraud or things that, don't tie out or, so there may be fraud occurring. We have no reason to suspect there is any fraud occurring. No instances of fraud were brought to our attention. And to the point of errors, no large errors went uncorrected. Everything was materially stated as far as we could tell. Our level of assurance is reasonable. That's the highest level of assurance that we can offer through an audit. We can't test every single transaction. We can't be a fly on the wall all through the year. But we do a lot of testing, a lot of analytics, recalculations. We tie out your budgets, all your debt, key documents that relate to a lot of your balance sheet accounts and the major inflows and outflows of dollars, more importantly, your budget. And saying all that, no concerns relating to any of those items. The actual layout of the audit report, the very first page is our independent auditor's report. Keyword being independent. We are not a function of the town. We are separate. We may propose adjustments, guidance, but it's up to management to accept and take responsibility for the financials as a whole. These are management's financials. They're derived directly from the accounting records. And again, it's management's responsibility to have the skills, knowledge, and experience to accept the financials and all the numbers and note disclosures. We do help prepare those because there's, as you can imagine, there's ever-changing standards and things that when you're doing it once a year, it's nice to have a helping hand and some guidance on some of the changes that keep, occurring year to year. After our independent auditors report, which again was a clean, unmodified opinion, is the MD&A, Management Discussion and Analysis. If you're looking for a good place to start, that is management's narrative on the financials as a whole. Kind of breaks it down into digestible language. I would start there, and then following that is the formal financial statements, note disclosures, and supplementary schedules. One thing that I usually point out for you guys, because you do have a enacted policy of maintaining a certain level of unassigned fund balance as you go into your next fiscal year. And the town's policy states that it should have a unassigned fund balance in the general fund, that is, that falls within 16.67% to 25% of the upcoming budget's appropriations. Basically 2 to 3 months of the upcoming appropriations. If there was no future income or inflows, you would be able to survive for 2 to 3 months on your available unassigned fund balance. The town did meet that obligation. I believe it landed at about 17.86%. So you are within the range that you've set out to remain in at year end, which is a good thing. Your budget, which is obviously important. I mean, it's all important. I can take questions, but as far as your budget, which is your Schedule 1 budgetary comparison schedule, just wanted to quickly look at that.
Justin, what page are you going to? Will you tell
I
me?
am trying to find it here. I am going to that would be page 46.
Thank you.
Schedule 1. This is, as you can see, there are an original budget column, final budget column. So the townspeople vote upon the original budget. Final budget should, in theory, mirror that pretty closely. There are some estimates used in the original budget that then essentially reflect actual. And then I believe the council can also vote to move reserves for different types of spending, funding that happens throughout the year. So that might be, especially on the expenditure side, where you might see some increases from one department from original to final. And then you have your actual column, which is your general fund operating revenues, expenditures, comparing to the budget line. And you can see in total that your revenues exceeded what you had budgeted, and your total expenditures were less than your final budget and your original budget for that fact, resulting in a surplus. So no departments came in over budget at the department level, and essentially did not overexpend your annual budget, which is important. And from there, I don't know if there's specific questions or concerns on anyone's mind. I can answer questions about the layout of the report, just questions in general.
Chair, may I ask a question?
No.
I know.
Well, you didn't answer it.
Yes.
Thank you. I appreciate all the hard work you and your staff have done. It's very important to us. Thank you for helping us year after year. When I'm looking at page 6,
Yes.
it says we took in over $2 million more than we were expecting. Any sense of what's the basis for that increased revenue?
Let's see.
Is it the reevaluation of property, or was it something else?
I can get you an exact answer. This exact verbiage does come from management. This is management's assessment of the change. So are you looking at a particular line item?
The third bullet down.
Third bullet down, okay.
I believe it says, fourth bullet down.
Okay,
Operations this year resulted in an increased net position of $2,989,079. The town's net expenses were $24,358 and change.
okay.
Which was, yeah.
Yep, so net position and fund balance are two different animals. Net position is your government-wide full accrual. Net resources, where your fund balance is at a fund level. There are differences in how those are presented, just to be clear before I continue to answer that question. So the government-wide financial statements is gonna include the town's long-term obligations, assets, where on the fund level, it's really focused on the short-term annual horizon. So you're looking at basically like an operating budget focus. On the government-wide, which is what this bullet point is basically disclosing, and if you look over on page 7, you can see in that table, table A, the net change in total net position, and it kind of breaks down based on current assets. Well, it goes right through your balance sheet, and you can see that net change does tie out to the bullet point. And just looking at this, your net investment in capital assets seems to be, a big driver, where there was more assets put into service than depreciation expense would have kind of
I see.
offset it.
Okay,
There are, other factors, but, just looking at that, that's one of them. Certainly get you a more comprehensive.
that's helpful to know. A
Yep.
follow-up question, if I may, is lower down, we're talking about the long-term liabilities of the town. And on page 14, I believe it is, you have a statement.
On table D, is it?
Yeah.
Yeah.
Page 14, right.
Yep.
So we've got some things. May want to build a public works garage. Our roof leaks in this building, might replace the roof, put on a second story, who knows? So the sense of what I'm trying to get at here is historically Standish has had relatively low debt compared to what we could have, and probably low compared to a number of other towns. And so we've been frugal, not just willy-nilly going out and spending money, but where we do have needs coming up, how does it look in terms of our overall debt liability? And it was partly really, the other question was, if we have extra money coming in, we have these other expenditures coming, just want to know, better understand for the public that's watching or anyone else, that our long-term debt is still low. And so we're in a good position if we feel the need to do some construction, build a public works garage or fix the roof or a second story on this building or something else. We have some room, some capacity to do that without, in a very significant way, making trouble for the town's finances. We're not on the brink of, borrowing as much capacity as we could. We're well below that. So we have some growth room where we could do these expenditures and not run up against some of these parameters that you mentioned, that what other towns consider an acceptable amount of per citizen amount that each person would have to bear for the cost of borrowing. So compared to other towns, I would say, if you're able to comment at all, we have a low amount of debt, and we have the ability to borrow without jeopardizing the town's finances if we feel that there's a need and a good purpose for the borrow.
Yep, to that, I would say what you're getting at is correct, and I'm trying to find the exact note disclosure that goes over the statutory limits of what the town can borrow based on its valuation, and basically where your actual total debt limit lands in comparison to that metric, which should be right here. It's on page 36, which might provide a little insight to what you're saying, or you're asking or getting at rather. The top paragraph on page 36, it spells out basically the different buckets and amounts a municipality can borrow for different purposes. We then take the total town's valuation, and you can see based on the total outstanding debt, you're really at only 5% of its total allowable limit based on state statute.
So that sounds on its face pretty darn good place to be.
Yeah, I would say so. I mean, I'm not involved in the strategy or, like you're saying, these ongoing projects, but it's certainly not concerning, and it leaves plenty of wiggle room should something major or, something be planned.
Good.
That,
Thank
that-
you.
Yeah,
Thank you.
you're welcome. And there is one thing in discussion with management that I did want to just bring to the attention of the board, of the council, excuse me, and Scott, hence I had the conversation with Scott, but it has to do with the bonds, or the town's bond levelization fund. It's basically a pool of money that's been slowly growing. And then in discussing with Scott, it was a tool that the prior finance director before Scott, I think, had implemented. I tried to find support for, like when that was implemented and the structure. Basically, the bond levelization fund at the time it was created was likely put in place when, say the town took out a new bond, I don't know if that was 15, 20 years ago. But the payment streams were not equal, so it was harder to budget, and there was a lot of swings. And this year it's so this was a tool where you would build your new public safety building in theory, and you create this tool so that it would keep the budget process streamlined. That being said, in talking to Scott, I don't think the bond levelization fund is being utilized for its original purposes. Or purpose rather, if it was just a singular purpose. So there is money that I think is a discussion for, the council and management to have on what the next steps are for that money. Because I believe, and I'm trying to find it exactly, I thought it was, let's see. I mean, it's a pretty large sum of money, $1.7 million. I'm in no way suggesting what it should be used for, but, just some off the cuff examples could be not taking out debt in the future, using that to, offset the budget so that your debt service isn't going up and you have probably a long time period where, you're not raising that piece of your budget. Maybe it gets put into a special project or, but it is worth noting that that money is probably better used elsewhere than just sitting here for an outdated, purpose, I guess I'd say.
If I could ask a short follow-up. Interest rates are coming down, and we may be able to refinance some of the bonds that we have, and that money would make that process a lot easier as well, to not only get a lower rate, but pay down higher, pay off what we have been paying at a higher rate.
Sure, and that'll be, like I said, there's probably a host of things that could be used for, or maybe used for different things. But it did have that conversation back in, I think it was October. I wanted to just put it on everyone's radar that, it's a good thing to have the money on reserve, but
Yep.
it's not really being utilized for its original purpose. And I think there's kind of some, what will it be utilized and when? So that will be a discussion internally on your guys' end.
Thank you.
Welcome. Other than that, there was, as I said, it was a pretty smooth process. Scott and his staff are a well-oiled machine. I had no troubles in securing support for, all the things we gathered, tested. It was a pretty smooth process and no findings, no significant deficiencies, no material weaknesses, nothing to report on in that regard. The finance team does a really well-organized job. Makes our job is hard and long and tedious, but it's helpful to deal with a well-established client that has got all their ducks in a row.
Good job, Scott.
Yeah, and Raylene and
And
still, yeah, it's a pretty strong team from the audit point of view.
Awesome. All right, Phil?
I just got page 6, bullet 7. I'm a little confused on this. Can you break down? It says we're 1.895 million above the minimum target range.
Yep.
I'm confused what this is all about. So can you break this down, what these numbers mean?
Sure. So, and I did speak to this, this is basically the town has a policy, a written policy that's implemented. where at the end of a fiscal year, after all the closing and adjustments happen, so the financials and accounting records are set, there's what in your general fund is left as an unassigned fund balance, which can be used for, you know, ongoing obligations. It's not restricted, it's not committed. It's basically, with voter approval, used for whatever it kind of needs to be used for. So the town's policy basically spells out that at year end, that unassigned fund balance should fall in, it's basically a range of 2 to 3 months. So if we're looking at this year's audit, fiscal year 25, we then looked at the fiscal year 26 appropriations in the budget, and you come up with your total number. And so that unassigned fund balance range in the general fund, per the town's policy, needs to fall within those percentage marks, which again is really a 2 to 3 month coverage of, say, there was no more cash inflows for 2 or 3 months, the town has enough resources to pay all its ongoing obligations before, you know, you need a plan B or.
What would ever create 2 or 3 months of no payments?
Well, that's a great question, and
I
hopefully no one
cannot see
wants
that.
to find out.
I'm just curious
Yeah.
why we're setting on $7 million.
Well, and you know, that's a pretty common target range. I think it's, you know, if something sudden comes up, I mean, I don't know why the town enacted that policy exactly. That was, you know, before, that's a management.
Something comes up this bad, we're all gonna not worry about paying or what the town can pay, but we're all gonna be in heaven or hell.
Right, I
To
mean.
say that 3 months is gonna go by and we're not gonna collect money and we're holding this money in a general fund bothers me a little bit, I guess.
Well, that would be a discussion between, you know, you guys and management to see if that policy needs amending or if you're underutilizing resources. I would suggest that it was basically meant to be a cushion and to know that, you know, you're not living paycheck to paycheck kind of mentality.
Justin, may I ask, I'm curious, what other municipalities do you work with? Is this like a state legislated thing, or is it's town to town, and what do you see other towns have for policies?
To be honest, most of the towns I audit don't have an official policy. You are one of the ones that actually has this, you know, target range that you have to land in per your own policy. And you guys have hit it for, I think this is my 7th year working to some capacity on this town's audit. There was 1 year back, probably on year 1 that I was involved, where it was just under that range. If that happens, I mean, it's not the end of the world, but there's like a corrective action plan. How are you gonna increase that unassigned fund balance to get it within the range? I have heard towns informally float that same range. I think it's probably a you know, a historic range that towns have used, but as far as any that are strictly held within their own policy, it's not what I'm seeing.
It's good to have a policy, correct?
Yeah, it doesn't hurt. Yeah, I don't think it's a bad thing, and I think having the resources available is a good thing. Whether that range should shrink or grow, or it's adequate or wasteful, that's for, you know, you guys to decide.
It's probably a bad thing for taxpayers, but a good thing to have the money in general fund, but.
Yeah, I mean, that can be used for something like a natural disaster, correct? We're putting up we wanna put up this new public works building, God forbid a tornado comes through and rips it to pieces, that's what this could be used for, yes?
Well, it could be used for anything the town votes on and allows you to use it for.
But yeah, so.
Yeah.
It takes one natural disaster.
One thing to keep in mind is, as of June 30, it's a snapshot in time. And we don't get taxes until November. So we have to go that 3 or 4 months based on our reserves. And it's over $1 million just in the SAT 6 payment. So every month, we're spending a big chunk of money. And that's what that is there for.
But you also have a big chunk of money coming in every 6 months, a big chunk of money.
Right, but we gotta get to that 6 months.
You should already have it for the previous 6 months should cover the next 6 months. That's normally what businesses do, right? And you only getting 2 payments a year, you budget for the 6 months ahead, not for the 6 months behind you. Well, I'm good, thank you.
Is it on the same topic or?
Yes, same topic, just a short,
Okay, yeah.
an example. I was on the school board for a while, and I think they call it a stabilization fund. They keep an amount of money every year, and when the next budget is coming out, it helps a cliff, going off a cliff because you suddenly get some catastrophic change in economics going on, and it stabilizes the transition from one year to the next because you have this cushion. So the school district does this. So this is a common practice for government entities to have something like this. We've just got it on paper as a certain number, but the practice itself is considered a good one, and it's common for school districts and towns to do things like this.
Correct. Whether it's formal or informal, most towns do have something that, they realize they need resources. They can't end the year with, a very small number and expect to just keep going. And to make, as Scott mentioned, the school payments on top of everything else. And this is very common amongst many towns, not every single one of them, but many of them, where, to your point about having the money collected and then kind of spaced out accordingly, it's all about timing. And if you guys know, I'm sure you do, the town has tax anticipation note borrowing to that same effect. And that's very common in all, I won't say all municipalities, but certainly I would say more than half of the ones I'm familiar with. That's very common, and it's really all comes down to timing. So I think this policy is also a buffer against, bad timing in theory.
Thank you.
Great. Jen?
Piggybacking on that, so if we didn't have this large unassigned fund balance, would we see our tax anticipation note requirements go up?
Well, that's a good question. I'd have to say it kind of depends. You'd have to lay out many factors. As Scott said, this is really a snapshot in time. So, as of, we're 7 months past your year, that unassigned fund balance, if you were to etch everything out, is going to look probably drastically different than what you're seeing here. And, you could do some analysis and try to figure out what makes sense, maybe lowering that range or, figuring out what works better and obviously is less impact cost-wise to the town through TAN or unassigned fund balance and obviously the budgeting process as a whole. Again, I don't want to exert on like what management and you guys are charged with, but I would say it depends. And if you do out the numbers, you could probably see it both ways, and then it would be a decision for you guys to kind of weigh.
So Scott, when you're trying to figure out what we need for a tax anticipation note after we're finished the budget year, do you look and see what's in the unassigned fund balance in making that decision?
I look at what we've spent versus what we've taken in and what our needs are coming up until we receive taxes. That's how I determine. Because
Scott, couldn't hear you down here.
I'm sorry. I look at the money's coming in and what we spend out to determine when we need more cash flow or if we need more cash flow until we get tax money.
Thank you.
Thank you, sir.
What's that?
Was there anything else from?
Oh, I have nothing in particular from me. I was just trying to see if there's any further questions or concerns, and I'm available anytime. If there's something that comes to your mind, you can reach out to me directly or through Scott. Either way, to help. So.
Well, thank you for coming. Appreciate it.
Thank you.
Good work. Good work, Scott.
Thank you.
Thank you, Scott. Thank you, sir.
Thank you.
All right, now we're gonna move on to discussion of impact fees. Are you into that?
I am.
Perfect.
You too. Thanks.
So I just wanted to give everyone an update. I'm actually gonna go stand up here so I can see you all.
Excellent.
Hey, everyone. Hope it's working. So this afternoon, we had a consultant come in from North Star. He's the guy that did our comprehensive plan, Ben Smith, and he sort of gave us a highlight of like, so I made notes about this. It's a little bit messy. So The impact fees are based on state statutes, and they're very clear about how we can spend it, when we can spend it. And so high level, I just wanted to say for this budget season, we do not have enough. We are not there. We are not spending any impact money on this budget season. So we are working on a procedure, and we're gonna bring it to the finance committee, and then it would come to council. And so what he sort of said was, we're growing, obviously. He can't say, and I'm gonna use this as an example, like, our ambulance is old, we need a new one. We can say, we are growing so much that we need a second ambulance, and those impact fee money can go to that. So there are very clear guidelines of like, public safety can have it, Parks and Rec can have it, and road can have it. And so we also need to think about as we develop this plan is not to get so high that people don't want to build here or they can't afford to build here. Like, for example, they said, Saco's been doing this a long time, Gorham's been doing this a long time, and we're almost as much as they are. And so we just need to maybe think about down the road of how much we want to allocate for each impact fee. And also, like, I was having this conversation with them. So like the one out here, the 25 corridor, that's only people who are building and feed into that are gonna have to pay that. So if someone's building in Steep Falls, they're not gonna be paying this. But for example, if we had a Parks and Rec impact fee, everyone would. So we wanna think about that. So he said best to identify projects. So all of the projects have to be in our capital. It can't be like, oh, we're growing and we need a new employee, we're gonna pay for that. That's not how it works. It has to be identified projects that are in our capital plan. And he said best that he's seen it is a few years out so that you collect enough money that it can have a meaningful impact. So like our new fire truck is a great example. Like, we're growing so much. And he said, like, we're now having apartment buildings, so it's a justifiable thing to say, we need a new fire truck, and this one is gonna have a taller lift, because before we didn't have any, tall buildings in our town, for example, to save people. Another interesting thing, and I thought of it when Mr. Deacon, you said that, and I may not get this exactly right, but it'll be explained later. So say we have a bond and we issue it, we can use impact money to pay back our bonds, correct? Yes. So like they said in Brunswick on Cook's Corner, they did that. They took it out. And so they said too, like, be mindful. The town knew they wanted to do a project, but they waited so long, the project doubled. But if they had done it, got a bond earlier, they would have saved $1 million-ish and then used that impact money to pay it down. So to really be thoughtful about long-term, where we want to be. So I just wanted to he said it as we develop our policy and it gets going, he'd come back in for a workshop, but I just know that where we're getting to our budget season, I just wanted to be clear, that is not in play it's not in play now. Does anyone have a question?
I was in Capitol, a chair, and we're assured that impact fees are gonna buy a new dump truck, and I actually come out here and said that to everybody. People in the audience that don't worry, the impact fees are gonna buy this truck this year. Is that truck now being taken out of the budget?
No, so it's not taken out, but I don't believe that in this budget year, it's gonna be next budget year. So I don't know where on the capital plan it was slated to have it, but he did say this. So say we have this dump truck in, he said that we can go back several years. So as long as we have it in a plan, when we say, okay, now we're gonna put this money towards it, it can go backwards sort of to debt and pay it down.
I just wish we had this information, because I would have never come out to the public and told them that this truck was gonna be paid for by impact fees, because we really misled a lot of people in this town, me including, because I didn't know about this until about a week ago.
Well, I think it was all foggy.
Why
So we are paying for it with impact money, 100%, but just not July 1st. It is.
I just think we shouldn't have ordered the truck or even thought about the truck until we knew what was on the table. That's what's bothering me right now. Because it was sold to us in Capitol that it was paid for and it was a done deal. And we were all excited. I was probably more excited than
Yeah.
anybody. I come out here that night and made a speech to the public. And
Honestly, though, that's why he came, because Zach was not sure, Scott was not sure, and honestly, the man who does it himself said he had to get back to us, because staff was asking questions and he wasn't even sure, so I feel like it is very gray, it's not a black and white thing. He said, he gave me the state statute, it's 30A 4354, he said, like, read it for yourself, it's sort of clear, but then it says, like, it can be for transportation, and then it lists off, but it doesn't he's like, it'll never list every single thing you could possibly use it for.
so when that truck comes in, we're gonna pay for that out of where?
That's not for me to decide, and I'm sure it eventually is gonna be, but this is the thing, we are growing so much, and we have so many more roads and developments, like, in the past, we've been able to, like,
Oh, this is right.
fix trucks.
This was rec department.
Oh, I thought you said public works,
No,
not
rec-
truck.
Isn't it rec department? It's the one that we approved this dump truck for. And it was gonna be a joint use, I think, with the, public works, but, you know, at this point, I'm pretty upset that we're going forward with this truck at this
Yeah, I
point.
don't remember.
Just because we sold it, that it was funded 100% by impact fees. I think Lisa might
So-
have been asked, are we sure it's gonna come in? And we all said, oh yeah, it's gonna be there. We got all kinds of, and we're so excited.
I thought you were talking about John, but you're talking about Parks and Rec. So I know that the chief wants to take his truck and
Doesn't
then
matter
he'd
who
get
wants to take
a
what.
new truck.
I don't care who's taking what. I'm just saying, we sold
No.
it down the road wrong.
Yeah, I don't think anyone knew that.
No,
Yeah,
I didn't- I
no,
knew-
it wasn't you, and I'll say that, we didn't
No, it
even
wasn't
know, we
anybody.
thought it
should've
was.
stopped it. We shouldn't purchase this truck at this point. I don't think, that's my opinion. I'm
Does-
done.
Does anyone else have a question about?
So that also means the Parks and Rec's Kubota that we all said was paid with impact fees really wasn't.
It was. That.
Is that the big exception to all this?
No,
or-
that was in the plan. That has been encumbered. We haven't actually received it yet, so we haven't spent the money yet. But, impact fees are going to pay for that.
And that's the only thing, but when we talked about this, nothing was gonna be for the next year's budget.
Correct, because we're saving up funds for, the chief's, public safety
Fire
tower
truck.
fire truck.
And he did say
We need to collect enough to make it meaningful. We don't have enough over 1 year, so.
and we can revisit that, we can put it on the agenda, we have another capital meeting coming up. We'll definitely put that on the agenda, Phil. Anyone else have a question about this?
So, one question. So the one that's ordered, it's encumbered right now. When it comes in, how are we gonna pay for that until there are extra impact fees to put?
We have enough to cover that.
Okay, so that's all, those are already set aside and banked.
But that's the only thing?
Okay.
Is that the only thing then?
In the plan was the subcompact mower
Mhm.
and open space land for Parks and Recreation,
But we're not buying anything yet.
not buying any land.
What account would that come out of that we have enough money in?
There's a reserve account for reserve recreation impact fees, has 96,000 in it as of July 1st.
Wasn't there enough impact fee money from Parks and Rec line already to pay for the tractor?
Plus, we've received 101,000 in impact fees for recreation this
And how much was this tractor? Do
fiscal year,
you know?
70,000-ish.
So because the Parks and Rec truck was in the capital plan, that's why it can't be paid for by impact fees, is that correct? Or is there not enough ratio to what's in there?
It's not in the plan yet, so.
So because it's not in the plan, then it can't be used by impact fees.
And we're updating that list, but honestly, until this afternoon, none of us knew that. And honestly, like I said, the consultant Ben said he's gonna get back to us about, cause we were asking about, like wheelers for public works and like, what part of it, if any, engineering or money itself to go to a new building. He said it can go to the engineering of looking at this building, but he's not sure about the others, so he's gonna get back to us.
And then to piggyback up that, is there a percentage of the impact fee money that we can use? So if we're buying a $70,000 tractor, if we have $80,000 in that line, can we use?
It's all based on calculations and new growth, a percentage of new growth. So if you're just replacing a mower, no, you can't. But if we're buying
Right,
a second mower because.
Yes.
I understand that part, but if it's because we're growing, the $70,000 tractor's there, there's only $80,000 in the account, so it's enough to cover the tractor. We have to keep a percentage of that money reserved in.
No.
No,
We can spend all of it if we need to, as long as it's in the plan and it's for the right reasons. Okay.
we could, yes. As long as it meets those.
Meets all the
criteria.
requirements.
And it was confusing because he was giving examples of different formulas, like the fire truck, I'm pretty sure could be 100% funded because it was for every one of use, but then he said something else of like, of 500,000, we could only use 40% of it based off of a formula.
Yeah, depending on the increase in growth is what drives that. So if you're just replacing something that everyone's gonna use, that always used it, then you couldn't use it, but if it's growing, if a building, say, is growing 30% more, you could use 30% of those impact fees to fund that 30%.
So the Kubota tractor's 100% funded?
Yes.
Follow-up question, so it's best practice not to make budget decisions based on what you hope will come in as impact fees?
100%. And that, yeah, that was something he said, and I have it highlighted. All you have to plan for it like you're buying it yourself, not like this is your second, like, wishing well penny dunk thing, cause
That makes me feel
the
so much
building
better.
could stop and we may not get that. So he reiterated that so many times.
He did say that ultimately the town is responsible for paying for it, so if things were to change, we have to find the money to pay
Yes,
for it.
exactly. So another of that balance is a good.
Like I said, I just wanna go on the book one more time. The truck was sold to us that it was gonna be paid for 100% with impact fees. And now it's going to possibly down the road after we buy.
We can update it at that meeting. Nothing was voted on. It was just, yeah,
wanted
no.
to clear.
I feel like that, it's like putting the cart before the horse, right? We were all excited about impact fees and stuff like that, and I think we just kind of like, hey, we could do this,
Sure.
and this before we found out. So it's not it's a simple mistake or honest mistake. And we were excited about a truck and things, we could pay for it this way. Now we've learned that, hey, and so we're gonna put it off, it's gonna get paid.
100%.
And it's gonna get paid.
And if he
for,
has
so
to
I don't
wait-
think there's no harm, no.
Yeah,
no foul,
absolutely
no
not.
harm.
It was a discussion. We meet several times for capital.
That if there's anything that says it can't be paid for, impact fees.
Right.
I think it's a discussion we need to have in capital.
Perfect.
Yeah, agree.
So the truck has not been audited. I was told it was audited. It's not been audited.
John knows.
I was told it was audited. That's what I was under.
You're in front of the rec building. Just arrived Friday.
It's
Shut
here.
up. You're joking, right?
You are fooling. So we got this truck thinking it was impact fees and now we're gonna, okay. Wow. Okay, yeah, we
So
screwed up.
then,
You buy a new truck.
It's not, it's Rex.
Rex truck.
and what's going on? How is it being paid for?
Already paid for, I'm sure.
It's already paid for.
Scott, do you know what line it came out of?
I don't, I'd have to look.
Do you have an idea?
I believe it came out of bonded money, because with the discussion came up through all this, I was involved in discussions, not necessarily me, but if the voters voted on it, they still bonded the money. Am I correct by saying this, Scott?
Yeah, but it's been bonded,
Yeah,
for that purpose, yeah.
correct. Because they still had to bond all the money for, like, even the tractor, if I'm correct, had to be borrowed money, and you would pay back
Correct, we pay.
the debt.
That's correct.
So it was gonna be the same thing for the truck. It was gonna be borrowed money
And then you pay it back with impact fees.
and pay it back with impact fee. I don't know if it can still be done, added and done back.
Identified in the capital plan,
Yes,
And-
yes.
I wanna just tell you again,
then yes.
as one member of the capital, I would have never brought this truck forward and had it sitting here if I knew it wasn't paid by impact fees when I'm just one member of that committee.
Thanks, John. Thank you, John.
You can tell them that.
I agree.
Well, I mean, it's like anything, you could say that you wouldn't have done it, but
No, I
the
wouldn't have
fact
done it.
is that it was a mistake and you.
I'm not saying
and-
it wasn't.
Right, so like,
I sold it to the public one night that it was
Sure,
impact.
sure, and that's
We weren't
really
gonna
under-
come out anybody's taxes. And I wish we'd have been ahead of it before. We're maybe,
Sure.
we were all too excited, I guess.
Yeah, absolutely, and I think that,
I think
you know, as a taxpayer myself,
myself,
that if I had heard about this, I would have known it was a honest mistake and stuff like that. And I think taxpayers would be, understanding. Yes, Jen?
How much was the dump truck?
$90,000, I believe, that ballpark.
Go ahead.
I could be wrong.
87.
65,000 came from the bond and 10,000 was in operating for the plow, I believe.
Oh, that's right.
John, was
yeah.
that something that was in our budget last year?
So it went, again, it went through the budget
Yeah, so it
process
was
as
already
being in
approved money.
capital, that stuff, but I don't know how it works as far as being taken out of capital, if we thought we were gonna use impact, I don't know how that works.
How long have we known this wasn't gonna be covered under?
We just found out
Just
at
found
4 o'clock today.
Okay.
But Scott, what, if it was already
Wait a
voted
minute, I
upon
was told
last
a week
year,
ago-
a
I was
budgeted
told a week
item?
ago it wasn't gonna be funded, and
So it's being paid for by bond.
I was told a week ago it wasn't gonna be funded, and if it, Seriously.
I'm answering what I know, but I'm not really directly involved with
if it
it.
happened at 4
You're
o'clock
doing a great
today,
job, thank you.
then somebody told me a week ago that it wasn't gonna be funded. I think I mentioned it to some counselor that I had heard that.
We just had the meeting today. So Scott, could you just clarify, I'm confused.
Actually, I talked
Did
to
Matt
two
put it in
counselors.
his budget and it was already voted on by the residents?
Correct.
Sounds like it's, I'd have to go back and look.
So it does, it's sort
Went
of.
to the voters to be bonded
It's in
because
the
it
bond.
was,
It was included as part of it.
it was a.
So it's
the
not a
four-
surprise. The residents already voted on it.
Correct.
Yes.
It was borrowed money.
Yes.
And 10,000 for the plow
Was
is
in operating.
and we were gonna pay some of it back with the impact fees, which can still happen.
Yeah.
Okay, great.
Yeah,
Ben?
we had a big discussion about it at budget time because we were doing this split
Yes,
where we were making the Recs department pay for the plow, but we were all excited because, yes, we knew we were gonna bond the truck,
right.
but we were gonna use impact fees, so it was gonna be a net zero pretty much, because it was gonna wash out.
And bottom line is, what I'm understanding is we still can pay for it with impact fees and
I think it just has to be added.
procedurally, we
Yeah.
just have to add it and do some stuff.
Correct.
So,
To the
Yes. Tomato, tomato. Thank you, John. Just sit right there for a second to be
Yeah.
sure.
I mean, I would thank you for getting ahead of this and figuring it all out, and now that we know, we can, operate a much better understanding, with a much better understanding of how this works, right? So, in the future.
Yes, it's clear as mud.
Absolutely, absolutely. Anybody have any other questions on the topic? No? Does anybody have any other items that they would like to bring up?
Is it strictly
Nope, it's
related to
just
impact
other
fees?
items, anything that you have on your mind that you would like to bring up?
When did we talk about this?
I can't see that.
It's like emergency.
Since it's an emergency.
Yeah, so one of our attorneys has been in the hospital and we have a backup, so I don't have an answer, but I do know that when we looked at this last time, council voted it down. They did not want to do anything beyond what the state wanted to do, and the state did set this.
Right, but this is, they're talking about the owners of the park are bringing in their own people and it sounds like they're not gonna follow Maine state law. That one
So
that was
that's a
just
civil
passed.
matter. The town doesn't, they'd have to get an attorney and fight that. That's not for us to.
So we can't do an emergency moratorium?
I'm waiting for attorney, and as soon as I hear, I will let you know, but, I mean,
You
we could we'll know before the next council meeting.
Right, but it reads like it goes into effect on February 1. And had we here, near there, I'm not gonna bring that up, but now on February 1, it sounds like they're gonna get hit with an increase again that we're not gonna be able to help them with, correct?
But they're gonna be in violation if they're not following the law, and I was on vacation when this came, so I
Okay.
didn't.
So then at that point, if they're in violation of that, at that point, it would be up to the residents Of the
That's my
park too?
understanding, yes, yes. And like I said, I did reiterate with the attorney when you emailed me. And as soon as I hear, I'll let you know.
Okay, thank you.
Great. Do you have something?
I just think, do we, since you brought it up and nobody at home has this in front of them, is it appropriate to read this or somebody just summarize what has been requested of the council?
Yeah, could you do it?
Yeah, sure. So we got a email from one of the residents in the park that they are asking the council to establish an emergency moratorium because lot rents at Pine Tree Estates is scheduled for an increase on February 1. 51% of the residents have asked under the statute for mediation, but they feel that they are being stonewalled by Pine Tree Estates, which is why they brought this request to the council. Thank you.
I got one.
Phil?
I think when we looked at the rent control at Pine Tree, I was on that committee. That's when LD 1765 and LD 1723 was up in Augusta. And I'm pretty sure that our committee kind of was under the impression that they were gonna put more teeth in it up there. And those two bills, all it says is they have to notify people of an increase and, you know, mediator. It really didn't do a lot of justice, but I think when we originally looked at this moratorium, we were under the impression that the state was going to, we didn't want to step on their feet because they were in the process of looking at LD 1723. And so I don't know if we need to go back and look at it again or what their feeling is here, but I know we sent them back to Pine Tree Trailer Park with the idea, let's see what the state's gonna do. So
Just to
that's
piggyback-
where it was when we went
Just to
through this
piggyback
process.
on that, we had both the park and the park's management asked us to table it until after the election.
Correct.
So when we came for our July meeting, they asked us to dismiss it.
Yes.
I voted against that for the record because LD 1765 or 1723 only pertains to mobile home parks, not any other person who owns more than 10. So I thought we should table it and come back to revisit it because that LD, all that does is say that you have to give notice and they are only allowed to increase by a certain percentage every 5 years. And that's only for a mobile home park.
And LD 1723, I think it never mentioned once about controlling rent. It talked about
Percentage
if you want to
increases.
sell the mobile home, that you should have first refusal, things like that, but it really never did address the rent increases of any.
One of them
mobile home
did.
park In the state of Maine.
Yep, one of them did, which is why I said we should readdress it because not only do we have mobile home parks that have people own more than 10 units, but we have big apartment buildings coming in. I remember raising a stink about it. So yeah, now I'm worried for the residents of Pine Tree Estates.
I'd like to apologize to people in the. This is blowing me up apart here.
There's reasons why people don't come to these meetings and talk about Pine Tree Trailer Park.
Yep.
And if, I'm not gonna get into that, but
Well, we had a
they're
lot of.
afraid to come up to this mic and talk about Pine Tree Trailer Park because of what can happen down the road. Because they have a policy, 3 violations and you're out of the park. And it seems like some people that might have come up here and spoke got treated not quite as fair as other people, so.
Is there anything that we can do to help them with that? That to
we
me,
looked
that
at
seems
Price increase, I mean.
dirty.
And I'll tell you, if you look at 5% or 10, the numbers never work, you know, I mean, cap it at 10% is $850, next year it'd be $920, the next year it'd be $1,000, in 10 years, you'd be paying $2,000 a month.
I think it's
If you only went up 10% a year, you know.
it's a certain percentage, a total certain percentage over the course of 5 years, and I don't remember if that's 5% or 10%, but that's over the course of 5 years, that's the max that they can raise it for one of these LDs. So is there nothing that we can do to help or encourage the residents of Pine Tree Estates as a town council? It's a legit, honest question, because I don't know.
No, if it was Pine Tree Estates only, but we have a couple other parks, one charges $400 a month. And now if we limit him to 5% over 5 years, there's a good chance he might not, because like he says, he only raises it if he has something happen, a water main went, he might have to raise it a year and then he drops it back down because he needs X number of dollars for a year or two. So, and then we got into apartments and
Yeah.
apartment rentals and, I mean, it just got crazy. It went from Pine Tree Trailer Park to affecting people that own homes, or that you couldn't increase your rent at a house.
More than
or-
10.
Yeah.
More than 10.
more
There,
than 10.
it was
We're
clearly
trying to
written.
get More than 25 or so. It got crazy here. I mean, we spent some time on it. It wasn't something we. threw
I'll
under the
follow up, I'll
bus.
call the attorney's office again tomorrow and I'll email you all.
Thank you. Appreciate that.
What again?
I'm gonna call our attorneys and see if there's anything that council can do. I do think it's a civil matter, but we'll
I
find out.
probably agree.
Anybody else have anything else they'd like to bring up, talk about?
Sounds like we're doing all right. Nice job.
Yeah,
The numbers,
job.
numbers that I looked at I was very pleasantly surprised. So yay.
yay.
Make a motion to adjourn.
Yeah.
I second.
So we have a motion to adjourn. We have a second. All in favor?
Good, good.